Good morning. Welcome to your mortgage rate forecast. Scott Criss, your mortgage rates and news. It is June 7th. Let's get going to some charts. Here's what we have. Look at this, guys. Last three trading sessions have been pretty solid for mortgage-backed securities. We're trading right now at $102.75. We are looking at a floor support between 102.70 right below us here. And our next floor support is about 102.20. So we have a pretty big drop off if for some reason we can't hold this. We think we will though. Our resistance is coming in right above us at 103. And here's the reports for the day. Unit labor costs came in better than expected, not so helpful for bonds. Productivity, didn't really have much impact. Not any news today, but there is talk about Yellen. She did come out and speak. It really appears that she's not going to be increasing the short-term rate, at least in June. So bonds have been pretty solid from that, and we can see we're trading way better than expectations. So to quantify, Freddie Mac came out with their May reports. May came out at an average interest rate they reported at 3.6 at 0.6 points. To quantify that, we're about 35 cents better than that right now, and so the same rate may be closer to only a quarter of a point. Anyway, here's the forecast for this week. What is consistent is all the analysts are pretty neutral on the short term. They don't think that interest rates or mortgage-backed securities are going to trade too different than where they're at. What's inconsistent is their long term. One of the analysts is really kind of neutral, doesn't think it's going to get better or worse. The other analyst is like, hey, I think we're going to do it. I think we're going to break above 103, and we're going to see some big earnings. Bonds, again, last week exceeded my expectations for my Thursday forecast. So you know what? I'm going to get a little bit more aggressive, and I'm just going to forecast this. I think bonds are going to trade between 102.7 and 103 up until through this coming Thursday. So let's take a look at where they're at, but that's my forecast for now. I think they're going to stay pretty consistent with where they're at, but maybe some slight improvement. As a consumer, that means if we're trading at 103, it could be even a quarter point better than where we're at today. So that's the forecast. Anyway, we'd like to hear what your thoughts are. You can leave your comments down below. Let us know where you think interest rates are going. Are they going up? Are they going down? And we're talking the 30-year fixed mortgage-backed securities. And if you don't mind, before you leave, don't forget to like this video. Everything likes to be liked, and so does this video. And if it's your first time on the channel, at the top left, you can hit subscribe. We usually do updates every Tuesday and Thursday. That'll keep you a good pulse on the market so you know what's happening with interest rates. And if none of this makes sense and you're like, what the heck do these charts mean? How does this impact me as a consumer that's looking at getting a mortgage? Well, top right, you're going to have a link that takes you to Mortgage Bonds 101, and it gives you some fundamentals of how these things work. Anyway, that's it for today. We'll see you next Thursday. Bye-bye.